Well, good morning, esteemed colleagues and fellow researchers. My name is Thanassis KAZANAS, and on behalf of my co-author, Marianthi KOLTSAKI, and myself, I am blessed to present our research titled The Economic Impact of the COVID-19 Crisis on the Food Retail Sector in Greece, a comparative and quantitative analysis of financial indicators. This study explores how one of the most vital sectors of the Greek economy navigated the unprecedented turbulence of the global pandemic. Well, in the next minutes, I will guide you through our research motivation, the methodology we employed to ensure statistical rigor, our empirical findings, and finally, the managerial implications that these results hold for the future of the retail sector. Well, to understand the significance of this study, we must first look at the context. In the 2020, the Greek economy faced a staggering contraction of 8.2% in GDP. While most sectors, particularly tourism and hospitality, faced a total standstill, the food retail sector, specifically supermarkets, emerged as a pillar of socioeconomic stability. Our research question was born from a paradox. While public perception suggested that supermarkets profited immensely from the lockdowns, did this translate into a structural shift in their financial health? We aim to quantify this by comparing a 3-year pre-COVID period, 2017 to 2019, with the active COVID period, 2020 to 2022. Now, for our sample, we selected the big 5 of the Greek market: Sklavenitis, Metro, Masoutis, Kritikos, and Vasilopoulos. Collectively, these firms represent the vast majority of the market share, making them an ideal proxy for the sector's health. We analyzed 3 critical dimensions of financial performance. First, profitability, using net profit margin, return on assets and return on equity. Second, liquidity, looking at current and quick ratios to see if they could meet short-term obligations under stress. And third, solvency, specifically their capital structure and leverage. Methodologically, we didn't just look at nominal changes. We applied the paired sample t-test to detect difference in means. However, because our sample size is 5, reflecting the actual oligopolistic nature of the Greek market, we also utilized the Wilcoxon signed rank test. This non-parametric test ensures that our conclusions remain robust, even if the data does not perfectly follow a normal distribution. All data were extracted from audited financial statements to ensure the highest degree of reliability. Now, let us look at the data. On the surface, the net profit margin across the sector rose from a slightly negative mean to 1.16%. However, our statistical analysis tells a more nuanced story. With a p-value of 0.45, this change was not statistically significant at the 5% level of significance. What we observe is a heterogeneous impact. While Sklavenitis and Metro showed remarkable recovery and growth, others like Vasilopoulos and Massoudis saw their margins compressed. The takeaway here is that despite the surge in sales volume, the industry faced an escalation of costs, including health protocols, logistics disruptions, and bonus pay for frontline workers, which effectively acted as a countervailing factor to increased revenues. Well, moving to liquidity, we see a similar trend of stability. The current ratio remained largely unchanged, hovering around 0.83. In most industries, a ratio below 1 is a red flag. However, in food retail, this is a standard operational model. These firms operate on a negative working capital cycle, selling inventory to customers for cash before they have to pay their suppliers. The gap between the current and quick ratios highlights the sector's high reliance on the inventory. Despite the global supply chain shocks of 2021, these firms managed to maintain their liquidity buffers, proving that their strategic inventory management was highly effective during the crisis. Finally, regarding leverage, the sector remained highly leveraged with a mean ratio of 4.67. While this might seem high, it remains structurally stable compared to the pre-COVID period. This indicates that the leading chains did not over-leverage themselves to survive. Rather, they maintained their existing creditworthiness and access to bank lending, which allowed them to fund their digital pivots without jeopardizing their long-term solvency. Now, something about managerial implications. What does this mean for master in business administration practitioners and sector leaders? First, scale matters. The large size of these firms allowed them to absorb the shocks that might have folded smaller retailers. Second, digital speed. The pandemic wasn't just a health crisis, it was a digital catalyst. Firms that had already invested in e-commerce and data analytics, or those that pivoted rapidly, were the ones that differentiated their performance. Third, resilience is strategic. The stability we see in the data isn't accidental. It's the result of effective countervailing management, using high sales volume to buffer against rising operational costs. To conclude, our study documents a remarkable financial resilience in the Greek food retail sector. While the pandemic was a period of intense uncertainty, the core financial structure of the industry did not undergo a universal sectoral shift. Instead, we saw firm-specific strategies playing out. Success was driven by firm size, speed of digital transformation, and the ability to maintain liquidity amidst supply chain chaos. Looking ahead, we propose extending this research into a longitudinal analysis. We are now in the post-pandemic era, and it's vital to see these trends in this post-pandemic era, particularly in profitability and turnover, where temporary reactions or the start of long-term structural transformation. Furthermore, A comparative study with other Mediterranean or European Union markets will help us understand how different institutional environments influenced these outcomes. Thank you very much for your attention. We are open to any questions or comments you may have regarding our data, methodology, or findings. You may email us. Thank you very much.